You open the app, and there it is again. Your car insurance went up. Maybe 20%. Maybe more. And you didn't even crash, no ticket, no fender bender, nothing. In 2024, the average American car insurance bill jumped more than 25%. In some states, over 40%. That is hundreds of extra dollars a year for driving exactly the same. Here's the strange part. Cars today are the safest they have ever been. Backup cameras, automatic braking, lane assist, blind spot warnings, gadgets built to keep you out of a crash. Safer cars should mean fewer accidents and cheaper insurance. Instead, the bill just keeps climbing year after year. So, what on earth is going on? To see why, you have to understand what you're actually paying for. And it is barely about your driving at all. It is about a giant, invisible thing you joined the day you signed up. Let's get into it. Let's start from scratch. Insurance is really just one big shared pool. No magic, no fine print yet, just a pool of people.
Imagine 100 neighbors.
Every one of them worries their car might get wrecked. So everyone drops a little money into one shared pot. Most years, most cars are fine, but a few unlucky people crash. And the pot pays to fix their cars. That's the whole idea. Lots of people share the risk, so no single person gets wiped out by one terrible day. The company running the pot just does the math, add up what all the claims will cost, and split the bill across everyone. That number, divided up, is what lands in your inbox each month. And this pooling idea is old. Really old. 3 centuries ago, in a London coffee house owned by a man named Edward Lloyd, merchants gathered to solve one terrifying problem.
Ships.
A single storm could sink your vessel, your cargo, and your whole fortune in one night. No single merchant could ever survive a loss that big alone. So they struck a deal. Many merchants would each cover a small slice of each other's ships. If one went down, they all chipped in to pay for it. That little coffee house grew into Lloyd's of London, one of the most famous names in all of insurance. And the trick was exactly the same one behind your car insurance today. Spread one person's disaster across a huge crowd, and nobody gets wiped out. Your monthly bill is really just the modern, motorized version of that coffeehouse handshake. So here is the key idea. Your monthly price is not really a gold star for being a careful driver. It's your share of what the whole pool is expected to cost. So if fixing cars, replacing wrecks, and treating injuries all get more expensive, then everyone's share goes up. Even yours. Even if you never so much as scratch your bumper. So the real question is, what got more expensive? For big things. Cost number 1, repairs. And this is where that safety twist comes in. All that clever safety tech, the cameras, the sensors, the radar, has to live somewhere. It lives in your bumpers, your mirrors, and your windshield. A little parking lot bump used to crack a $60 plastic bumper. Annoying but cheap. Now that same bump shatters a bumper packed with sensors. And that sensor array can cost thousands. Worse, after the repair, all those sensors have to be precisely recalibrated by a specialist. Get it wrong, and your car slams the brakes for ghosts. Repair costs jumped about 10% in a single year, 2022. The safer car turned out to be the pricier car to fix. Now, here's how fast a pool's costs can explode, with a story you may have actually scrolled past online. Back in 2021, a trend blew up on TikTok. It was called the Kia Challenge. Videos showed that certain Kia and Hyundai models, built without a basic anti-theft chip, could be started with little more than a USB cable. Thefts went vertical. For those vulnerable models, theft claims jumped more than 1,000% between 2020 and 2023. 1,000%. The pool took a beating. Big insurers, including Progressive and State Farm, even stopped writing new policies for those models in some cities. And here's the gut punch. Even if you drove a completely different car, you were probably in a pool helping pay for all those stolen Kias. One viral video, everybody's bill. Cost number 2, replacing the whole car. Sometimes the damage is so bad the insurer just writes a check for a new one. And after the pandemic, car prices, both new and used, shot up and stubbornly stayed high. So, every car that gets totaled now costs the pool far more than it used to. Pricier to fix and pricier to replace. The pool's repair bill ballooned. Cost number 3, and it's a giant. The weather. In 2024 alone, the United States had 24 separate billion-dollar weather disasters. Hurricanes like Helene and Milton, plus hailstorms, floods, and wildfires. A single hailstorm can dent and total thousands of cars in one afternoon. Every one of them a claim, all from the same pool. As the big storms get more frequent, the pool pays out more and more often. Cost number 4, people and lawyers. When a crash hurts someone, the pool covers the medical bills, and healthcare keeps getting more expensive. On top of that, lawsuits and settlements have been getting bigger. A lot bigger. Insurers have a name for it. Social inflation. A crash that injures someone can now end in a payout with a lot more zeros on it. Repairs, replacements, storms, and settlements. Every single one of those costs went up at the same time. Which raises a strange question. Why might your neighbor pay far more than you for the very same careful driving? Because the pool is sorted by where you park and what you drive. Live somewhere with more theft, more crashes, or more hail, and your local pool simply costs more to run. And the car matters as much as the driver. A cheap-to-fix little sedan sits in a cheaper pool than a gadget-stuffed SUV that costs a fortune to repair. So, 2 flawless drivers can pay wildly different prices. One drives a simple car on a quiet street. The other parks a sensor-packed truck in a hail-prone, high-theft city. It was never really a grade for you. It's a grade for your pool. So, why did all of this land on you in one brutal jump? Because insurers can't just raise prices whenever they feel like it. In each state, a regulator has to approve the increase first. So through 2022 and 2023, costs raced ahead while prices sat stuck, waiting for permission. The companies actually lost money for a while. Then, finally, the approvals came through, and all that held back increase arrived at once. Which is exactly why your bills seemed to explode overnight. So, here's the real takeaway. You were never really buying a price for your own driving, or even your spotless record. You were buying a small share of everyone's risk, every repair, every storm, every lawsuit, every stolen Kia in the whole pool. That's why a flawless record can't save you when the pool itself gets more expensive. The pool rises, and it quietly pulls you up with it. And it's why safer cars can still mean a scarier bill. The crash happens far less often now, but it costs far, far more when it finally does. So drive as carefully as you like, and you really should. You still can outdrive the pool.